Today we're going to talk about some interesting things that are happening with cryptocurrencies. We also have to talk about real estate and some of the events going on there. And most importantly, what you're all asking, I'm going to address in this video, what is going on with the price of gold? Nothing we say here is intended as personalized trading advice for you. On behalf of myself and the entire Peter Leeds team, we love you guys, we do this for you, and we do this because of you. Well guys, I'm back in Toronto. Good to be out of New York City. And I appreciate you guys bearing with me while I took care of some stuff, but now I'm back. Now we can really get things rolling. For example, the gold coin contest, we'll address it next video because I want to talk to Tammy and Roman before we do the next step. And then also I want to talk about the army I'm raising, but that's also not in this video. First, we're going to look at some major headlines that I find to be very interesting, very timely, and you want to hear about them now. And I'm trying to talk about cryptocurrencies less right now, but when something relevant pops up, I want to address it. So for example, two things here. First, number one, this is from Crypto World. From $10 billion to zero, how a crypto hedge fund collapsed and dragged many investors down with it. And they're talking about Three Arrows Capital. They filed for bankruptcy, and that triggered a downward spiral that wrapped in many crypto investors. The hedge fund failed to meet margin calls from its lenders, so bankruptcy, delinquencies, defaults. And this story isn't over yet. And this next article, which is related to that one, showed up on my screen while I was preparing for this video. So this is very fresh information, again from Crypto World. Founders of bankrupt crypto hedge fund 3AC go missing as investors try to recoup assets. The lawyers representing 3AC's creditors say the physical whereabouts of Zhu Su and Kyle Davies are currently unknown. The filing from Friday also alleges the founders have not yet begun to cooperate with the liquidation process in any meaningful manner. And I told you when you started to see one or two of these, this is going to be more and more. They're going to spread. And this is just an example of that. So that's why I'm showing you this. I won't even talk about cryptocurrencies anymore unless it's completely compelling. You guys get the idea of where everything's going with this stuff and who said what. And then you see how it's playing out and kind of gives you an insight into who knows what they're talking about a bit more. And anyways, let's move on. That's enough of the cryptocurrency stuff for now, but I do think that you should be watching for a capitulation point, Bitcoin or Ethereum only. And this is from talkbusiness.net, the supply side. Retailers grapple with widespread inventory glut in recent quarter. I told you guys that was going to be one of the deflationary pressures. There's going to be a lot of liquidations, especially bankruptcies. They're going to sell all the assets they have. And a lot of businesses that are still functioning reacted to the economy shutting down and then the stimulus checks and the buying habits of people. They reacted to that to say, oh, we need way more inventory. Plus there's all the inventory supply shocks. So they want to get ahead of all of that. And a lot of businesses loaded up with a ton of inventory right at a time when the entire global economy started freezing up. With inflation making things cost more, people are spending way less money, and now all these businesses with all this inventory are going to start competing with each other to start getting rid of a lot of this inventory. And they're going to do that first and foremost by cutting the cost on the shelf. Last month, Walmart surprised investors when it reported 32% higher than expected inventory for the first quarter ending February 1st. Costco inventories were up 26% from the previous year. Target saw inventories up 43%. The inventory glut goes on to hit Macy's with an inventory build of 17%, 40% at Kohl's, Dick's Sporting Goods, and Gap, seeing a 34% inventory oversupply. Walmart US CEO John Furner said about 1/5 of the 32% jump in inventory in the first quarter came from merchandise piling up more quickly than the company wanted. Another chunk of the increase came from the desired replenishment of goods after supply chain disruptions last year led to more out-of-stock items. So keep that in mind in terms of deflationary pressures. It won't be a massive deflationary pressure that builds and builds and builds on itself, but it's going to be one in the short term that's going to help you. So keep it in mind, put a pin in that. We're going to go back to this in a second. Home buyers are canceling deals at the highest rate since the start of the pandemic. The share of sale agreements on existing homes canceled in June was just under 15% of all homes which had gone under contract. That's according to Redfin. Home builders are seeing the same kinds of effects of people walking away from homes that they contracted to buy. So cancellations are at just under 15%. Last year that was 11%. That number's climbing. You watch it again next year, 6 months, 3 months from now, it'll be higher and higher again, especially once they raise rates again. Higher mortgage rates and surging inflation are causing many potential home buyers to reconsider their purchases. Average rate on a 30-year fixed mortgage started the year at 3% and it got up as high as 6% in June. That's a double of what people are paying for their mortgages at a time when you're also paying a lot more for gasoline, for example. Higher mortgage rates have also caused some borrowers to no longer qualify for the loans they want. Lenders generally use debt-to-income ratio of about 28% as the ceiling for home loans. However, in the second quarter, they exceeded that limit of 28%. It's at 31.5% of how much debt to the person's income that they find acceptable. So we are already in a risky kind of territory right now where people are taking on more home than they can afford. And that's as high as it's been since 2007, up from 24% the year before, making it the biggest jump in more than 2 decades. Buyers are increasingly keeping rather than waiving inspection and appraisal contingencies. What that means is when you buy a house, you say, okay, I'll pay for the house at that price. We'll agree on that, but that means I also get an inspection and an appraisal. And when the market was really strong, everybody's buying houses, nobody's selling, there's limited inventory. What's going to happen is that when you're trying to buy a house and you're getting competitive, you'll pay above asking price. You might waive the inspection, might waive the appraisal to make it a clean offer. And now what you're seeing is that the buyers are taking a breath and they're saying, no, I'm not going to buy it unless I get the appraisal, unless I get the inspection. So that's one of the ways you can see the entire real estate market starting to turn the corner, like I told you. You can watch the little subtle indicators. But listen to this. Home builders are also seeing higher cancellation rates. Even before the sharpest increase in rates in June, cancellations in May jumped to 9.3% in a survey of builders by John Burns Real Estate Consulting. 9.3% of all homes of home builders that's being canceled after they sign the contract. That's up from 6.6% a month earlier. Wait till you see what happens when they raise rates again. And if you remember that video I made earlier, a couple videos ago, I was talking about how you can see in the shipping numbers how home building is slowing down. There's less furniture, less lumber, less appliances. It's showing you something, it's telling you something. If you're looking at all these subtle signs, you can get an idea of exactly where the entire real estate market is going to go, which will be deflationary. But what is going on with gold prices? This is so surprising to me. I believe that gold's going to have its day. I imagine it's a matter of months, if not quarters, and if it's not quarters, then it's years. But that would surprise me, but I've been wrong up until this point. Gold right now is at about $17.25. Silver is at about just under $20. And this is an article from CNBC. Despite recession risks, lately investors have opted for the dollar over gold, pushing the currency to a near 2-decade peak. Also eroding the appeal for bullion among overseas buyers. Interest rate hikes, meanwhile, raise the opportunity cost of holding bullion since it pays no interest. With the recession that's coming in, and it's going to be a big one, there's going to be less demand on everything, even commodities. But gold is a play on the collapse of the American dollar, which is underway right now, and it's a question of how fast it happens. And they've been able to extend it out a long time now because there's so few options for currency outside of the American dollar. People are going into other major currencies, other countries are going to other major currencies, but the majority right now are all flocking to the American dollar. It's considered to be a lot safer, but what is belying is that the American economy is in such worse shape than anyone overseas is recognizing. And when everybody figures this out, so too will gold. And I'll say a little bit more about that in just a second. I just wanted to go back and mention the inventory glut is going to be deflationary. The declining home prices are going to be deflationary. Even fuel prices now are lower than they were a month ago. Fuel prices are starting to come down. That's deflationary. Does that mean we'll get deflation and no inflation? Well, you either get one or the other, but we may get a bit more inflation, especially with China every couple of weeks shutting down another port. As long as they're doing that, there's going to be supply disruptions. There's going to be more dollars chasing a limited amount of goods. But overall, I feel that most of the forces right now are very deflationary, and they're building up now. I've been expecting disinflation, a slowdown in the rate of the inflation increases. So inflation went up very dramatically, and it has not done that again to that degree. That is disinflation. We're going to have disinflation. We're also going to have a massive deleveraging. Everybody is outextended as much as they can get, especially with investing in the stock market. If you can borrow $100,000, you've borrowed $100,000. That leverage is already starting to turn around as people are having margin calls now. But the thing I want to talk about with gold, someone asked the other day about if you had to choose one of the gold miners, because they're completely undervalued right now. What an opportunity to buy a good, high quality gold mining company now. He asked, which one would you suggest? And I was writing back an answer, and then I realized, you know what? Everyone will benefit from this. You'll probably benefit from it too. So I asked Stephanie to put together a small summary report, and she's going to send it out instead of the hot list pick this week to the subscribers of peterleeds.com. And it'll give you a few selections of some of the top mining companies that we like, that we believe are completely undervalued right now, which is a lot of them. And if you're scared out of gold right now, if you're getting a little bit freaked out because the gold mining company you own has come down a lot, then please don't worry about it, in my opinion. You don't have to worry about gold. Gold can worry about itself. It'll take care of itself. The lower the price of gold, the more demand and the more mine shutdowns, the more constraints on supply, the more demands on demand. But I like Humana Gold, Newmont Mining, Barrick Gold if you want to go with one of the big ones like, well, Newmont too. I always like Avino Silver and Gold Mines, but we're going to give you some of our top picks and talk a little bit about each company and what sort of situation they're in right now. If you're looking to get into what will be the most unloved investment you ever buy. I always tell you that it's a good investment approach to just always invest in whatever's the most unloved at the time. What could be more unloved right now than precious metals? People forget what precious metals are for, what they're about, and they're going to be reminded in a big way. And I've told you before, with my whole philosophy on this, 2 words, just wait. If you're worried about gold prices right now, just wait. Hey guys, it's so great to be back here in Toronto with you. We're going to really start rolling now. We're going to do the gold coin contest. We're going to raise an army, and we're going to do the quarterly state of the market report, which talks about every aspect of the market. That'll be a video coming up we're working on right now, and it's going to be a good one.